Like any new product, the market wants to be able to value the securities. So back to John and the work of MISMO, investors, in my almost 28 years of Freddie Mac work, I never had an investor say I've got too much information.
Welcome to Actualizing Success. In this podcast series, our in-house advisors discuss today's finance and technology topics with an emphasis on solutions that embrace tomorrow.
Good morning, everyone. We're going to have a really interesting conversation about ESG. And folks have probably heard the acronym and maybe thought about it in terms of how different companies are rated and so forth. But today we're going to focus more about how ESG applies to the mortgage-backed securities market here in the U.S. And so today we've got two guests that are joining me on the podcast. We have our own John Pomaranski, who's a director at Actualize and has been working diligently with the MISMO ESG community of practice since its onset. I worked a little bit on that over about a period of a year and a half, but John's been working on it to date. And then Mark Hanson. Mark is a close friend of ours at Actualize, former client and real industry titan in terms of the mortgage-backed securities industry, spending a lot of his career at Freddie Mac, but also in the bond market on Wall Street. And so we're really excited to have both of you two today. So let's get going. So John, as I mentioned, you've been involved in the ESG community of practice at MISMO for a long time. Just tell us a little bit about what that is, how it started, and how things have been progressing over the period of time.
Sure, Matt. So we introduced this ESG community of practice at MISMO in August of 2021. And at the time, ESG was a very hot topic. It was starting to come up in the news, and a lot of people were trying to figure out what it is. So our number one goal was to get our hands around it. What is it, and what does it mean to the mortgage industry? And as we can tell, if you break down ESG, environmental, social, governance, it's a very large topic with a bunch of different avenues. So our first kind of idea was, what should we do? How should we set this up? And we kind of rallied around a couple things. One, let's have a liaison section. So not only what we're doing, but what are other folks doing? What are other trade groups doing? MBA, ABA in the mortgage industry. What are the government agencies doing? And we had some folks that to help us there that has a lot of experience and deep knowledge of the industry and know folks. The next piece was kind of that legal aspect of it. So we have some bright minds in the legal space that are really plugged in on the Hill, especially focused domestically. What kind of bills are coming out? What is the scuttlebutt going around that we might need to be concerned of from a mortgage standards perspective, where we can maybe start to educate or think about standards? And then also it gave an opportunity for the mortgage industry thought leaders to start to come together. There's a lot of people passionate about affordability and sustainability in mortgage lending. So it gave an opportunity for us to kind of come together and say, okay, let's start this. So we really focus on a couple things. One, education. Where are the topics we can continue to educate and further explore? And our initial thing that we kind of came up with was, hey, let's define E and the S. If we were really serious as an industry about being able to create pools of loans or things of that nature, let's first start to understand what it means to be an environmental or social product. What we did was first we looked at the MISMO data set and a couple other industry data sets, such as HMDA, the U's, and the GSE disclosures, and started to say, okay, what are they asking? And then from there, create a list of data elements, definitions, where it aligns on kind of the life of loan mortgage scale, maybe start to provide some information on what could this be used to define affordable, a social, or an environmental bond. So we started to put that together and took that out to the industry to kind of get what they think and how could this be used. And what we eventually did is utilize that to create kind of a framework. So if you wanted to create a pool, what would you need to know? How would you want to set up your framework? And there are things that we kind of dive into. What are your privacy concerns? How should you engage with your stakeholders, your business partners that you'd want to create the social bond with? What kind of disclosures do you need to think about? And then we provide some use cases and some tools to maybe help provide that. So really where we are with that, that's been in the making for 4 years. And we took it out to industry comment period late last year. And we got some fantastic feedback. We're incorporating that in, and it's about ready to go out for a second comment period, looking to publish at least phase one. And I think where we relied on this is, hey, let's get this out to the industry and figure out, what else we need to do to make this utilize. Another thing we did, and this is why I talked about this has a lot of different avenues, is we had the commercial industry come together and say, hey, when we go out to properties, we want you to tell a story, a good story. And we'd like to ask certain questions about the property, the operational and environmental impacts that they have, and the company of the commercial property we're getting into uses. And, this is a new thing. And we want to start getting the industry used to thinking about these things. How much pollution are you putting out? What kind of sustainability things are available? What kind of renters do you have? What kind of programs do you have? So what we did was we had the commercial industry kind of come together and say, hey, here's some questions. And we created what we call the Green Borrower Questionnaire. I think it's better known in the industry as the ESG questionnaire of common things that the commercial lenders can ask of their properties to help get people used to answering. And I think, where we are with this, it's been out in the industry and it's been very widely adopted. And I think where the industry is just waiting on now is potential changes coming from the federal agencies on mandating some of these and some of these disclosures. Another thing we really started to do, and I think this gets to your second part of the question, is where are we going now? Well, there's a huge need in this industry to help the borrower. And I was talking to Mark about this. There's a huge concern about the borrowers have the right information when they're getting into a property to understand their risks, environmental risk, fires, and flood. So what we did is we worked with the industry and some federal agencies to come up with a flood risk disclosure. So how can we get information to the borrower as soon as possible in the process? And what information do they need to know about a potential property, whether it be a purchase or a refinance, and give them resources that they can kind of go and look at this. And Mark has a good story around his brother-in-law and what getting into a property and having no idea about the flood risk until we looked up a popular industry product and said, whoa, this is a maximum flood risk. Like, do not buy this home. So what we did is we worked with a lot of lenders and federal agencies, CFPB, FEMA, being FHFA, to say, hey, can we get this into the borrower at the closing table? But B, that's too late in the process. So how can we get this up front as early as possible in the home buying process so borrowers can see this? And what we did is we worked with lenders to get this out. If you're a borrower and you want a new home, you need to know your credit score and you need to understand the potential flood risk of a property you're interested in. I think this is a continuing work in progress, but the initial phase was to create this resource guide. And then lenders are starting to populate this on their home buying info guides, as well as the CFPB and their kind of things to think about when you're buying a home. And I think that really gets into where we're going next and what we're seeing with the industry, or where are some additional opportunities we can help the borrower. And I think this kind of led into some exciting news in the industry. In February of 2024, the agencies released their mission index. And this essentially was giving a score to a Fannie or Freddie pool on what is, based on these certain criteria, a social index. And I think that, like I mentioned, that was launched in February, and we should start to see some numbers on how this is going. I think the first release is going to be later this month or early in June. So that's another thing I think we're going to be focused on is how is this working, and then where does this take us next? Where we've came from is understanding, and I think where our focus goes in the future is really continuing that education, and then what can we do to help the borrower?
That's really amazing. A lot of progress over that time period. And while you were working on that, Mark was heavily involved in his role at Freddie Mac. And Mark, just if you have a minute, can you just talk a little bit about the same topic in terms of the bond market and where it really started and where it's come so far?
Yeah, thanks, Matt. I appreciate the opportunity. And John gave us a great intro to build on here. ESG is dozens of topics. And as the GSEs experienced them, it came in many different angles. It affects both internal and external efforts. There's a lot to it. But just to narrow it down for this conversation, when we looked at, in part of what ESG meant, it was bond issuance. And bond issuance, as you know, Fannie and Freddie are two of the largest issuers in the marketplace. They have trillions of dollars of outstanding product. That creates an incredible launch pad to bring new products out into the marketplace. If you can build a product off of the TBA market and utilize its liquidity, and effectively call it maybe a new category, a new specified pool category, or spec pools as they're referred to, then you have a really good chance to getting that product up and going. So that was the general direction back in maybe in 2020, just as John was describing, things were starting to percolate. You saw in the external world, in the bond space, a lot of advocates on the money manager side. Most notable was BlackRock and its CEO, Larry Fink. And they were, proselytizing virtually for the development of ESG thinking, both inside companies and the development of products. So that gave us, further traction in getting started in all this. But like any change effort, you're going to have impediments to growth. And let me call out at least several in this. The first is, and kind of tying into John's remarks, you need a foundation of data and standards, and then eventually market adoption for all that. And it's tough to pull all the data together quickly and confidently, because that data needs to then support statements made by corporations. SEC is very tough on things like disclosure, and the wrong side of disclosure is greenwashing, exaggerating, or creating hyperbole around what you do from an impact standpoint. And so the data is really core to making sure that that's done right. The GSEs are great creators of standards in the marketplace. So having them and their scale and just their existence gives them a chance to help define what standards are. But those standards only work if the market accepts them. And even though there is a precedent of maybe 20 or more years in Europe of ESG bond investing and development, it doesn't all apply here in the U.S. There are different standards, different authorities, different needs. So number one was getting the foundation laid, and that's certainly in progress and it has a lot of traction. The second is kind of the market timing, the market conditions. Given quantitative easing and quantitative tightening, rates have gone to historic lows and then quickly bounced up. And that's had real consequence to the lending industry. It's tough when there's no new loans to print to keep the lights on and the loan officers employed. And it's tough further for those that want to bring change and new products to the market to get them engaged when they're economically stressed. And it's been that way for a couple of years. We're all anticipating the Fed will cut rates someday, but that's yet to come. And there's still a lot of survival mode, I would say, among lenders at this point. And survival precedes any kind of change budget for most lenders. So that's been a challenge. The third category I would call political headwinds. And we'll get into those perhaps later in this conversation. But I have to say it was the most surprising part of what the last 4 years have brought. As Matt noted, I've been around a long time. I've seen a lot of products launched. I didn't anticipate kind of the vitriol and pushback that we've seen in some places, particularly around things that are called green or sustainable. I believe there are at least 15 states right now who have outlawed the option of its pension plans and those state workers that qualify for those pension plans to choose ESG options with their own savings. I didn't see that coming. But what it has become is a very polarized topic in places, particularly with states that feel like they're on the wrong side of the ESG conversation and where that's all heading. And what you end up with are challenges to, is this really the job of a money manager? Is this their fiduciary duty? Is there efficacy in GSE investing? And it largely comes from those states that have economies that are perhaps oil or gas or drilling related, that have been the most disagreeing in this whole development of things. So, like anything, I think progress is never a straight line. That's certainly the case with the last 4 or 5 years of GSE bond development, but there's progress nonetheless.
Yeah, that's really interesting where you're coming from on all of that, and amazing insights. And John, I think we've seen some similar things within the MISMO group, or at least some of the conversations. Can you talk a little bit about, just react a little bit to what Mark said? Are you seeing the same things? Do you see a little bit of a different angle? Are there more specifics that you want to go over in this space?
No, it was really interesting, Mark. I think, you spoke to exactly what we're seeing. And I think key to the root of that is the politics, right? ESG has become a topic word. And, one thing we've kind of thought about is, okay, this is affordable lending and this is sustainability. So maybe we start to call it that instead of that word ESG, because folks don't even know or understand what's at ESG, but what in mortgage lending is at the root of that. And it's essentially that. So, yeah, the politics is definitely interesting, and it has changed since 2021. And I think, Mark, you nailed all the reasons about the economics behind that. So really, a lot about this, and we talk about affordable lending, is how do you serve the underserved population? There's definitely a need out there, but because of privacy concerns, nothing you can do or release can ever be able to tie back to the borrower. And that's one thing we've had a lot of work on, because even if you're trying to do good and you create a pool of loans to help a very specific type of borrower in a very specific location, you cannot say that, because whether you know it or not, somebody can get in behind that data and try and be able to tie a loan back to a borrower. So we've done a couple things in that area to maybe try to get around that, or thoughts. Now the GSE, the agency's mission index, great start. But we've worked with FHFA on a couple things there on, are there programs where maybe borrowers can disclose or release specific HMDA regulations, so you could have a very targeted population that you're trying to reach. But I think when you look at it from the grand scale, privacy is definitely a concern that lenders may have when creating this. I think Mark hit it with the greenwashing. How do I know that someone just didn't go in and change their light bulbs and say they have a green property? So like, how can we start to get better data? The climate concerns. So we've had a lot of folks come in and talk about, the amount of climate related events happening and the destruction to real estate. Well, we've dug deeper. Why is that happening? Is it a changing climate? Is it folks are building in places where they are at a high risk for climate? And I think it gets in between a little bit of both. So I think when you start to look at sustainability, you do have some areas, especially from an investor perspective, of, hey, this just isn't a good loan, and there needs to be more resiliency. Well, what can we do, or how can we get better data around showing that a property is resilient in these kind of situations? And then I think, at the root of it is also the profitability. So how can we, you're taking on risk possibly with diving into some of these. So, there are a lot of thoughts and economic insight that, these are profitable. These are desirable. There is a worthwhile investment here. So I think it's just continuing on that message. And like I mentioned before, we're looking to see how the GSE's social index bonds are coming and what kind of numbers do they see on that. And I think, that will really help continue to open up the market. And I think last and finally, it's really in why do people want to do this? And the one thing I've heard at a lot of industry events is it helps tell a story, right? They want to do good, and this helps tell a do good story. So, I think it's just continuing that market and that avenue for folks to be able to do things to help the community. And then how do you say you help? Looking forward to see how this continues to move. And I think we do have some good data that we're going to about ready to be able to dive a little bit deeper into and analyze what are our next steps and what does this mean.
That's really cool. When I looked at ESG in a broader sense, not as much in relation to the bond market, it seemed like, there are right and left leaning thoughts around it, but really ESG to me is something that is less partisan, but I guess it is, I guess we're really not past that. And so, Mark, can you just give a little bit more insight in terms of that dynamic, and if you have any thoughts about whether you think it's changing or it's easing, maybe talk a little bit about that or not.
Yeah. Thanks, Matt. I think it's evolving, and what I see evolving is this multifaceted need from the marketplace. One is like any new product, the market wants to be able to value the securities. So back to John and the work of Mismo, investors in my almost 28 years of Freddie Mac work, I never had an investor say I've got too much information. If you ask, would you like to see, You don't even have to complete the sentence, and investors want more data with more back history, in greater detail. And so I would call that kind of the valuation crowd. So part of what is going to be necessary for this market to lift off is for the valuation crowd to properly put a number to what this security is worth. And that involves prepayment estimation, and data is the way that most analysts get there. The second part, though, is almost a different category of employment at a lot of money managers. I'd call that the qualification. How do you know that this product meets the standards that either you've laid out for your investors or that you're accepting from someone else, be it a rating agency, your own internal people, or some other classification? And so there's been a lot of push and pull around that, because with qualification come the risks that we've already hit on a couple of times of greenwashing, the liability of misrepresenting in some way. And so what my experience was over the years was when you go to sit down with a money manager, there were two different people. And in the early years, 4 or 5 years ago, the trader and the compliance officer, if you will, from the money manager, hardly knew each other and didn't really have that much connection. So they were almost separate functions on the same CUSIP of saying, can I buy this security? Can we put it in our green fund? If so, what are the risks and all that? And then ultimately the trader has to determine and at what price. So I think that those are kind of natural evolutionary steps of trying to figure out a new product, how it fits, does it qualify? But again, we'll revisit this whole political aspect. Most of the way that the market values any security, you can define in two categories. They're the fundamental value of the securities. So what are those cash flows worth? And then there are the technicals. The technicals are kind of the supply and demand forces that also affect the value of the security. So bringing in the politics again, if certain states and certain investors refuse to buy those securities, well, that has a technical consequence to the marketplace. There are less buyers for those CUSIPs. And, in the worst case, maybe they don't qualify for a TBA trade. So those are all, kind of the different lenses into some of the market partisanship. Certainly, traders want to buy securities cheaply with a lot of information. Compliance officers want to be safe from liability. And then, it's kind of discovery of the market to see who's in and who's out of these products. What I would say is that, and John touched on this earlier, to try to navigate all that push and pull, we've seen some things reframed and relabeled. So I've seen studies where in certain states, they don't refer to properties that go up on the market as green. They find that it's more acceptable to call them high performance properties, not green properties. Again, nothing different about what's in the house or the HVAC or anything. It's just the labeling of it. We've seen less and less use of the term ESG, and in place, sustainability seems a little bit more acceptable in that space. The social bond index was the precursor to the mission bond index for a lot of those reasons, including privacy, as John pointed out, that there are a lot of landmines in this space about either exposing protected class information or the borrower, or giving out something that is beyond your purview to give out as an issuer. And that has been a very careful walk through that minefield for the GSEs to finally get to this, this thing called now the Mission Bond Index, which is consistent with their charters, their values, and they can represent it, but they can't stray too far from that. And so to meet the market's needs for data, there's a little bit of a void and a gap for others to come in and put that information together. And I see analytics firms trying to do that. So, back to the question of, is it partisan or not? Sure. There have been signs of it. Sure, it shaped some of the outcome of things. It will continue to do so. But I just feel like, that's the general nature of headwinds to getting anything new, whether it be change or new products introduced into the market. And it's evolving in that way.
Wow. Okay. Mark, appreciate that. And we're in the home stretch of the podcast. I'll even say maybe we're in the speed round. And so the last topic that we're going to go over is really about what's next. And so if we could just pull out our crystal balls and look deeply into the future, where do we see the market in 5 years? And, if you could add on to everything that you've said already, but just really where you think it's going to be in 5 years.
Well, let me just overshoot a little. I think in the long term, call it 20 years, it will converge toward where Europe is. Europe's been going at it for 20 years, but Europe has also come at it from a political policy agenda where things are more market oriented here in the US space. Let's see if the market wants to pay up for these bonds or not. I think that what will influence where we are in 5 years are things like elections. There's certainly a different point of view, a different approach from red and blue perspectives on this. I think, it'll be interesting to see if federal or state legislation ends up shaping these marketplaces, like so many other topics that we're dealing with right now. I think if it does become more of a federal and blue near-term outlook, we'll get to kind of a European standard and European markets more quickly. Otherwise, I think it's just going to be a, kind of a not straight line path there, but eventually we'll get there.
Okay. Yeah, that makes sense. I guess, John, you're really grinding through the standards process really more than anything, but, I've got to believe that your community has been talking about the future too. Does that sync up with what Mark just talked about, or do you have any different views on that?
Yeah, I think 100%. And I think Mark touched on a couple key themes of what MISMO is and what we can bring to the table. And that is data. All right. So continue to utilize data standards and things of that nature. And then, keeping our eyes on what the federal will say. The federal legislation is coming down. And Mark touched on, your European precedents, and will that come to the U.S.? And I think that thought is yes, which I think means a lot of things. That means everybody's going to have new reporting requirements, new data is going to be required, new timing. And, I think that's where we are. And one of our key goals is staying plugged in to all those different facets that I said is, so we can see what's coming and prepare ourselves. So, when that time hits, we're ready to go and serve the industry what they need to help with a lot of these things coming.
Yeah, that sounds right. And I've been listening to both of you for the last half hour almost. My take on the sustainability piece is that it really is just going to evolve in terms of how people use building materials, processes for building homes, more technology. So I actually believe if you just take a look at how a home was built 100 years ago and now it's radically different, I think it's going to continue that way. I'm not sure if I believe in the 3D printed houses exactly, but geothermal and all of those things I think are just a matter of fact. They're gonna continue to progress, not just because of but more because it makes sense from a dollars and cents perspective. And then on the social side of it, I think people that follow Actualize know that we're very heavily involved in affordable, and I think that's something that the country really has been founded on, is the ability for people to get better over generations, and I think it's a key part of what we're all about. So I think we will see progress. Politics blow in the wind, in my opinion. I think it really depends on whether we have a streak of blue or red for years. I think that could definitely change things around, but fundamentally, I think this makes a lot of sense and will continue along. John, you've discussed, and we've discussed, the community of practice at MISMO. Can you just real quickly tell the audience how they can get involved in that?
Yeah, sure. And I think hopefully folks listening to this podcast is just interested and passionate about this. And I think quite simply, we meet the first Tuesday of every month at 10 a.m. Eastern. And I think sometimes a lot of our meetings have some wings in a different areas for collaboration and opportunity. But if you're interested, please reach out to me and I can get you plugged in. And I think key to mention is a couple things we have working on that I think is right up this conversation's alley. The first one, define the E and the S deliverable I mentioned. We're looking to publish that in early Q2. But I think key to a lot of what we talked about is what we're starting to take a look at. And that is, let's look at the entire life of the loan. And let's start to map out various swim lanes of stakeholders. Where's data needed? And then from there, start to look at where are our gaps. And I think that will give us great insight to where do we drill down on? Where in the industry can we bring in some thought leadership to help us expand this thought? And then what does this mean for the mortgage industry? So an example of that would be, let's start to look at pre-qualification. We talked about the flood risk disclosure and how getting information out to the borrowers, but what else is there? So let's start to talk with housing counselors and other agency folks to really dive down that opportunity. And I think then we can continue to have a path across the mortgage industry and a lot of opportunities to really show us where our gaps are and we need to dive down. And I'm really excited for how the beginning inner workings of how this is going to work, because I think it's going to hit the nail on the head to continue to evolve to make sure that we're keeping up with everything we talked about, not just the next 5 years, 10 years, but 20 years. And then where is at the root of it, that data, and what can we do to get there? Please reach out to me and I'd be more than happy to get you plugged in.
Yep. And you can also look at www.mismo.org to see more information about Mismo. Well, we've had a good time this morning. It was a real energized conversation. I do want to thank both John and Mark for talking with me this morning. And again, you can take a look at Actualize's website and see what we do. And if there's any interest in ESG or other topics, please get in touch. Thanks a lot.
Thanks for joining us for today's episode of Actualizing Success. Make sure to visit us online at www.actualizeconsulting.com, where you can explore our service offerings. Don't forget to subscribe to the show on iTunes, Spotify, or your preferred platform. If you've enjoyed what we talked about today, please consider leaving a review and following us on LinkedIn. If you have any questions or would like to share your opinions with us, please send us a note at podcast@actualizeconsulting.com. We look forward to hearing from you.